All right, we are now live. Hello, good morning, everyone, and welcome to those joining us just a few minutes early. My name is Charlotte. I will be your Money Show host for this session. Just wanted to let you all know that I have Adrian here with me in the Zoom room, and we will begin his presentation on time at 9:05 a.m. That is Eastern time, coming up in just a few short minutes. Looking forward to a great session and a great day with all of you. So thank you very much for your patience, and I hope you're having a great morning so far. Hello and welcome to those just joining us. We do still have a couple of minutes to go for the first session of today's show. It will begin on time at 9:05 a.m. Eastern Time. Thank you all so much for your patience. Hello, everyone, and welcome to the session. It is my pleasure to introduce Dr. Adrian Mans, the co-founder, of TradersInsight.com. Now, Adrian provides education to serious traders who are looking to add new interpretations of the markets to their repertoire. Now, he's developed a trading style that relies on statistical, technical, and fundamental analysis in the planning of every trade, and he's found methods to extract the most out of every setup every day. Now, to our live viewers, please share any questions you may have throughout this session in the chat box. It is located on the right-hand side next to the video player. Time permitting, we'll see what questions we can get to towards the end of the session. We do have plenty of time here, but I know Adrian has a lot to share with us. And with that said, I will hand the mic over to you, Adrian. If you need me, I'll be right here, but the floor is all yours.
All righty, thank you. Good morning, folks. So I'm coming to you live from Mammoth Mountain. So we are skiing and having a great time with our kid up here, and that's why we trade, right? So the first thing I always tell people is, if you really want an edge in this business, you need to know what your why is. And our why has just always been freedom, and how can we go and do things like run around the world doing money show appearances and then staying in places for a month at a time, and we've really we've maxed this thing out, is what I'm going to tell you. Trading has been very, very good to us over the years. We've been trading. So for those of you who don't know us, I'm going to blast through just this introductory stuff because we just really, in order to get to the open, we're gonna have to do things a lot faster than we usually do. I'll give you a link at the end where if this stuff resonates with you, you can come watch us trade live for the next couple of weeks and sort of listen in on what we're doing. But just so you know, we've been trading since the start. So when online trading, as soon as online became available, as soon as I'm going to say the advent of Realtek was really what got us into the markets, where you could have direct access to the markets. $20 commissions in, $20 commissions out, or maybe they were even $30. We were trading in eighths and quarters. We were down on the floor of the exchange getting data. It was, it was different. We were both working on our PhDs at the time, sort of specialized in behavioral finance. We're both psychologists. And I'll say that the psychology portion of our degrees, the PhDs were, I'm going to say, probably more helpful in the world of trading than our MBAs were, which kind of seems upside down. But when you get into just how much of trading is psychology, it really winds up making a lot of sense. It's the war really every day that people perceive in trading is not between you and the markets or you and the market makers. It's right there between your ears. So, we got into this early on, and my big project in grad school, as I said, I had data. I was getting data from the New York Stock Exchange. Every tick on every instrument that was traded, we were pulling in, because grad students are all about data analysis. And the access to the New York Stock Exchange was just phenomenal, right? And being able to get down, be on the floor, be part of the specialist system, know the specialist, know who's on the other side of a trade, understand sort of that the psychology of the human being winds up being the psychology of the stock. And that's changed a bit over the years with the ECNs becoming so prominent and everything. But in reality, it's still very much the case. The stuff that I did was all published in a book called Around the Horn: A Trader's Guide to Consistently Scoring in the Markets. That will be back in publication, I'm told, in the next 2 weeks. So if you're going to get a copy of that, you can. It'll be on Amazon, and there'll be a totally new edition coming out later this year. But that book was about 7 distinct patterns that represent what the market is doing at any given time. So it's about market cyclicality. It's written around a baseball metaphor, primarily because it was originally titled A Multivariate Analysis of Covariance in the United States Equities Markets, and nobody's buying that book, right? So we did it around a baseball analogy. Big baseball fans. We're Los Angeles, right? Angelinos. We love our Dodgers. And it goes through and just focuses on what's happening on daily charts and how can we take what's happening on a daily chart and anticipate what it means in terms of order flow, what it means in terms of what institutions are doing for tomorrow's intraday trading. So how do we set up and get ready for what's going to happen intraday tomorrow based on what's happening on a daily chart today? I've also done a ton of stuff in popular press and magazines, journals. I've been featured in books, and it's all about this orderly way of trading. And the big one was that a couple of these publications latched onto is, I'm a trapper, not a hunter. So we're letting stuff come to us. We're letting the trades come to us. I'm going to show you what a trading plan for us, a typical trading plan, looks like. It's very different than what you're used to seeing if you're out there looking at things in chat rooms, or we do have a room that is mostly alumni, mostly people who've worked with us at our income trading boot camp, but is also open now to other folks. You can pop in there too if you'd like. This is a very structured way of trading, though. This is a very different thing that we do in terms of how we plan things. I don't know if it's because we're on the West Coast and we wanted to set this up so that we didn't have to do a whole lot of thinking right around the open. 6:30 is not the greatest time in the world to be, figuring out what you're going to do with 5 or 10 stocks. But we've got a pre-planned component, and we also have then the discretionary stuff that I'm going to show you. And that's also very much planned. We plan the discretionary based on what's happening in the pre-markets, based on what's happening overnight. We try to trade this the way that institutions do. So no institutional trader is sitting around sweating every tick, trying to figure out what the market may do next. They're not plotting you're going to see on my charts here in a minute, there's not a bunch of indicators. There's price, there's volume, and there's volume by price. I focus on the thing that actually drives price behavior. If you need to look at a stochastic to figure out, that's looking back 5 or 10 bars to figure out what the trend is, or where the momentum is, or whatever it is that you're trading, you need to ask yourself, well, isn't it sort of easier to just look back at the chart, look at the last 10 bars. It's easy to tell whether the market has made consecutively higher highs, consecutively lower lows. And, rather than reacting to what a line that's really not going to head in a particular direction until after the fact, what that line is telling you, focusing on the pure price action makes it a lot easier to take the emotion out of it, and not get confabulated, get confused about, well, this indicator is saying that, well, I've got a stochastic that's saying this, I've got an RSI that's saying that, I've got these 2SD bands that are telling me, whether they're Bollinger bands or the bands that I developed. They're either 2SD of price in the case of John's bands, or 2SD of volatility in the case of mine. That stuff is helpful in terms of directing behavior, but it's not helpful in terms of setting up your trading plan. And you really need to pre-plan everything. I use a lot of tools, and I do have, if we get you to the room and everything, and we get you to download what we have. We've got a lot of tools that we lean on a little bit. There's some materials there that I'll share with you, things like Bookmap and news sources, right? So I use several news sources. I use Reuters. I use Financial Juice. We use Trade the News. I like to stay on top of the news, but I'm not a news-based trader. I just want to know, is there something that's going to create shock in the markets? Outside of that, what I'm looking for is, what are the levels that represent order flow in the market? Because order flow is your bread and butter. Order flow is going to be where you're able to hop in and out of the market and make a non-directional market in terms of entries and exits. For us, I don't care where Tesla is going to close today. I really don't. I don't care where Apple's going to close today. I don't care where really anything's going to close today. All I care about is, for the period of time that I've defined, that a stock trade or an opportunity is going to be active, can I get on the same side of the order flow as an institution does? And that means, you're really only pulling, in a lot of cases, you're trying to pull $1 per share out of the market in a big boy like Tesla. Or if you're trading something like Amazon or Apple, it might be, from 80 cents a share down to 40 cents a share in the case of Nvidia sometimes. But you're getting into pockets of liquidity. You're identifying where the orders are resting. You're looking for where the passive order flow is sitting, what price is doing in relation to that. And you're always bearing in mind that institutional traders are going to be compensated for that order flow. So they've got a reason to sort of push price and pull price. I had somebody tell me this whole thing's so unfair, and why is this legal, and why is this right? They're manipulating the market. They're not manipulating. This is how the market's set up. Market's not set up for retail traders. The market was set up by institutions, for institutions, a long time ago. And if what you want to do is make money as a trader, you need to be on the same side of the trade as the institution. Forget about what you're hearing on YouTube and TikTok and all these things. I think these are probably the worst things that have happened to traders in the time that we've been trading, because they convince people that there's 1,000% to be made every day if you just do X, if you just do Y. And the reality is, I can teach anybody how you make a living trading. I don't think anybody can teach anyone how to return 1,000% on an account. I've yet to meet anyone, and usually when they tell me they did it, I just say no, you didn't. It's this is might be one trade, might be one option setup or something, but the reality is trading is pretty hard, and it's a psychological conundrum that you really need to wrap your head around. And the best thing you can do in terms of getting in front of the opportunities for profit is make sure that you're prepared for the day. So the preparation that I'm going to show you here, you've got to have clarity right at the opening bell. You have to be ready to execute. You have to have your trades set up. You have to have your bracket orders set up. You need to have an entry point and an exit point to the market. And especially if you're trading right at the opening bell, those bracket orders will prevent things from going horribly wrong. You can limit what the loss is going to be before the trade starts. And then if you're wrong, if you've got a 1-by-1 bracket, so you've got a $1 stop and a $1 target on something like Tesla, if it turns around and goes against you, yeah, you might lose $1, but you're not going to lose the $25 run. So I've talked to people who had, they get in, it starts going against them, and then all of a sudden they freeze because it's moving so fast that they just don't know what to do, or they're like, well, it's got to start moving in the other direction. Something has to happen here. You want to reduce that stress. You don't want to be out of your head trying to figure out what's going to happen with one particular trade, because in reality, the opportunities that you're going to get in front of, like today, we're going to talk about opening gaps, 2SD opening gaps. I don't know if there's going to be any, but that's the nature of looking at this stuff live. We're going to focus on how do you get in front of the consistent opportunities, and how can you be in a position to have 1, 2, 3, maybe 4 trades going all at once and not be completely stressed about it because you've got the order execution is set up ahead of time. So what are you going to look at before the opening bell? You're going to look at market context. You want to see what happened overnight, what's happening in the macro environment, what's there's oil inventories today, right? There's futures are moving on the heels of an extended ceasefire. All that stuff's driving price. The last time I looked, 200 and some odd points of Dow movement is going to happen right at the open. NAS is going to move too. So, we've got to sort of frame then where the high probability setups are going to be. Is Tesla right as an opening trade going to be the trade that I take, which is a lot of times the opener, or do I let it sort of settle in, pull back to a threshold level? Those are decisions you make based on what are the futures doing? What's the news? Is there going to be, Financial Juice has a nice thing that'll show you, Trump's schedule. So you can see, is there the wild card of president's going to be addressing, the country right after the market opens? I mean, that kind of thing happens, right? And you don't want to be positioned for those high volatility swings then. We define the exact entry and exit levels for all of our trades. So the around the horn trading plan, those are NYSE trades. The volatility band trades, those are NASDAQ trades. All that stuff's defined ahead of time. And we've got all of those trades in written plans, so that, we can look, this is today's plan. So at the end of the thing, again, I'll put up a traderinsight.com/money show link. If you go there, you can get all the plans and download them for the next couple of weeks and see how this works. But basically, this is what a trading plan looks like for us. We've got these around the horn plans. These are core. So these are going to be pre-programmed. The stocks to watch have a little bit of discretion. The stop loss on these trades has to be validated. But you can see that for each one of these trades, everything is fully set up. We know exactly what it is we're looking for. We know exactly where we're looking to get in, where we're looking to get out, what the money management rules are on the way. And, at the end, we have this gouge sheet that, when I first started doing this plan, this is the longest running plan out there on the internet. I started doing this in 1997 and did it for, this was back when Vandermolen was a Dutch specialist firm, was on the floor of the exchange. These were going out to institutional traders. That's really what this plan was developed for. But it works very nice for retail because you can see entry, direction, stop loss, 50% to target. That's where the stop gets moved to break even. Here's the target, 10 cents to the target. We move our stop to 50%. This is all automated, right? You can go and just pre-program this stuff. You can also go and watch it and do the trades yourself. You can do bracket orders, basket orders. You can do conditional orders on this. There's a million different ways to set those up. These are the NASDAQ trades that we set up. I'm really hammering through this because we're coming up here on the open pretty quick. The NASDAQ trades, these are volatility band trades, I call them. So you can see for today, there's 3 trades on the plan. These don't necessarily trigger. None of these trades are necessarily going to trigger. In this case, Microsoft is sort of setting up at the bottom band. Julie just signaled me over here. She's sitting here. You're going to hear her giving me some opening gaps on audio. So she's not on camera, but she's here.
Hi.
In this case, we had a short sale set up on Google, and you can see the different levels. So from 332.21 effectively all the way down to 350.53. Those are the levels that we were looking at on Google. Microsoft is a long for the session, possibly 424.47 up to 426.96. Tesla was set up as a short on the session, 388.14 all the way down to 385.33. Those are volatility bands, and those come into play if and only if they're entering those bands from the proper direction. So for a short, we want it entering from above. For a long, we want it entering from below. And I don't want to see it jumping in on a really big bar, right? So these are all things that are structured ahead of time, planned ahead of time. Apple is that's a trade that we do as a response to a delta hedge that market makers are doing. So if Apple is trending up in the pre-market, then we go and identify where the order flow was on Apple. And in the event of a pre-market uptrend, we look for the support, the resistance, right? Where's everything bracketing up? And then we look at order flow in terms of where the book map shows that there's a bunch of shares sitting. And then we try to go and say, all right, well, if it's moving higher and then it moves lower back down to that threshold level, market makers are going to have to go and hedge that delta because they're acting like bookies, right? So market makers, options market makers just want to stay neutral. They're not looking for a directional trade. They're looking to maintain a neutral position on the market. And that's a place we can profit. So then if it comes back down to that support and resistance level, we buy, and then we're out as soon as it gets up into the next overhead resistance and then next trade. So we focus on a basket. It's a small group of stocks that we focus on in terms of and discretionary for us is very limited, right? It's discretionary is still planned. We look at the Mag 7 stocks, particularly Tesla and Apple, right on the open. But we'll trade them all. We look at the triple Qs. I trade the triple Qs vis-a-vis the NQ. You just get a lot better leverage, and there's no sense tying up $500,000 on QQQ when you can effectively do the same thing with the NQ and have very, very little capital requirement. These things are high liquidity, so there's very clean movement on the Magnificent Seven. There's very clean movement, obviously, on the triple Qs. And what we do is we use the QQQ as the trigger mechanism for the NQ. You can analyze price data better, differently. Let's say with QQQ, you've got volume by price data, whereas when you're looking at contracts, that volume by price data doesn't look anything nearly as clean or as logical as it does on the triple Qs. It's the same chart, but the entry and exit rationale is just much easier to put together when you're looking at the Qs. So, these are all stocks that have very high institutional participation, and that institutional participation puts us then in front of patterns that repeat themselves. So, we're looking for, as I said, on some of these things, on Tesla, for example, what's the pre-market range? What's the high? What's the low? I'm looking at the entire pre-market, then I'm narrowing it down to sort of the hour before the opening bell. So Realtek gives me access to the 24 hours of session data that's out there. I start looking really at about 8:30 Eastern time is where I bracket things up. The 2 standard deviation opening gaps, that is 2 standard deviations of volatility, puts you in the 95% confidence interval of the mean that you're going to get back. You're going to get a reversion move. So we're not doing gap and goes. We're looking for fades. We're looking for the opportunity for sort of a 1, 2, 3 stair step. If you guys have seen my stuff, if you guys go back through Money Show and look for videos and things, there's lots of recordings of that particular trade. It's a bread and butter trade for us. I'm gonna talk about it again in Dallas. So if you're not registered for Dallas, if there's any way you can get to Dallas, I'm gonna do the Dallas Money Show and do a 2-hour session there, a masterclass that's really going to go pretty heavy on this. And this is absolutely a bread and butter trade. We've got lots of traders we've trained over the years who wind up gravitating to that and maybe making that their only trade. So they're done trading by 10 a.m. Eastern time. And then those volatility bands, you saw the trading plan for that, those keyed off institutional levels. And everything is based on, if you're going to take a trade, excuse me, has to be completely defined. Entry price, a stop, a target, and you have to know your position size. And if something like Tesla gives you palpitations when you look at it, you can also trade TSLL. It's a smaller dollar, sort of one of these leverage things that gets you amplified volatility, but minimizes the dollars that you're putting into the stock, or just drop the share size. There's no reason everybody has to trade big shares. You can drop it and you can trade 50 shares of Tesla and make good money if you're trading it right. And trading it right just means you need to know ahead of time. You're working this like a pro. So if price trades through X, then I do Y. On the 2 standard deviation moves, a 1, 2, 3 is just, imagine sort of a pullback looking thing where if it gaps higher, you're looking for lows to move up. 1, 2, maybe 3, 4, it could be 5. We stopped trading those at 10 a.m. Eastern time, but the violation of one of those lows on a gap higher would get us short. The violation of the highs on a gap lower would get us long. It's a very structured trade. We know exactly where to position the profit targets. We know just where to position the exits for a stop. And it makes for just a much easier opening bell when you've got these kinds of rules in place. And then, finally, the volatility bands, make sure they're in our case, make sure they're headed proper direction. You want to be absolutely certain that which direction these things are going. I guess I've got sort of a short chart analysis session here at the Open. So if you want to come join us, you can be there for 2 weeks, traderinsight.com/money show. And then you'll get full access to everything we do. So you get all those plans every day. You don't have to, no credit card or anything like that. You just pop in and sign up. You get the volatility band plans. You get the 2SD opening gap trades with us in the morning. You get this other plan that I do that's an algo driven plan that looks at tech and biotech. And then if you put your phone number in there that you can get a text message at, you also get an update when I'm going to do live streams. So I do live streams throughout the day that you can just click on your phone and then join me, and you'll see exactly what I've got planned for the next hour and a half, or into the end of the trading session. Okay, so it's just traderinsight.com/money show, and I'm hoping I can send you that information sort of after the event here. But maybe what you need to do is just jot that down and go and sign up for that online. So like I said, we're not going to pester you, but I think you're going to like what we're doing. I think you'll like what we're all about. So with that said, let me see if I can get into here charts and see what's happening. So you see that
Tesla's still in the first band. You can see the price.
Yeah, we're moving lower. So Tesla's already sort of bouncing out of the bands that I've got identified here as pre-market zones. So the high on this was 389.94, 387.99. This is before I got on with you folks. I'm going to look for this one. I'm going to look for a pullback up into this range in order to trigger something, just because just going short at a low bar or something is going to be a problem. Here's the book map on Tesla. You can see there's some overhead resistance there. We've got about 4,000 shares to go at 390. Got another 10,000 shares up at 392. 12,000 shares to buy at 385. So if we get a pullback up into that 390 level that holds tight, I'll probably look at that one and just and say that's a potential short sale. So I like to pop back and forth between what's going on the book map and what's happening on the charts. You can see we've got some pretty clear air here between these volume by price bars. These are a hierarchical cluster analysis that I set up with Realtic years ago, that just identifies where is the important volume. Where's what's important in terms of driving price going on here. And then the rest of these guys we're going to populate with opening gaps, we hope, as the market opens here. And we will see if and when we start getting some opportunities. So in something like this, right, if Tesla just goes and blasts, this is not something that I want to jump into. So right now, if, on the other screen, I've got a level 2 of Tesla up, and, right at the open, it's such a mess, the market's crossed. So if you go and jump in, then the chances are you're not getting a realistic reflection of where price actually is. So then you're, oh my God, I got filled way out of the market. Are they nuts? What did they do to me here? It's just better to, on a day where things are swinging like this, on a day where it moves big right out of the gate, to just let it do its thing and then wait for sort of an orderly pullback, an orderly move that gives you an indication of where price is actually going. So my guess is it's probably going to continue lower, but that we're going to get a pull back up into this range here, into this pre-market range, and then we can see if there is an opportunity. In terms of the gaps, what we do is we start looking at these sort of around the open here and in the first 5 minutes of trading, but you've got time. So you've got time to go and just say, what gapped? Are they symbols that we're familiar with? Are they, where's the gap? How deep is it? Let's see if we can get some of these symbols here from Julie. What do you got?
So CALX, CYH.
Oops, I didn't take my symbol.
MAS. Oh, okay. We have scroll through.
Right, so you see here that, CALX, I don't know if you guys are bar chart guys or candle guys. I can make this a candlestick for you too, if that's better for people. I trade in bars. I prefer bar charts, but we've got some things that have been trading recently on earnings. We've got some things that have been trading on
Earnings with MAS, MANH, MCRL.
Okay. So now what we're going to do is wait for these things to sort of set up and give us sort of proper order, right? So right now we don't know what's going to happen. All we know is we've got 4, probably 5. So Apple is not a candidate this morning. You can see it was trending down in the pre-market. So what we can do here is, so at home, I'm trading on a bunch of screens, as you can imagine, and they're big. So it's a lot easier to manage a ton of symbols, but we've got so on Sunoco, right? What we're looking for is this going to maybe do a stair-step move lower? It looks like it could. On CALX, same thing. Manhattan Associates. This one might wind up being what I call a trapdoor, where they bomb out of the bottom on the second bar. That's an entry as well. It might wind up just being off the books because you can see there it's getting down into yesterday's floor trader pivots, and once it sort of moves into that, that's going to tell you that you're back into sort of a normalized trading range that you would expect for the stock. NASCO, this one looks like it will definitely be a 1, 2, 3 kind of a stair step. I might have to switch these back to bars just so that I can see the patterns develop a little more clearly on this little screen. But it is this is the process, right? So we are not at all about that about that frenetic energy of just trying to bounce into every potential symbol that's out there. We want to see
If you cut Tesla by the tail down at the bottom band, it came back all the way back up. I'm looking to see if it pulls down and sets up
right.
again. Microsoft is now down below the bands. Let's see if it reverses. Trades haven't triggered. Let's take a look. Hmm.
All right, so we're just going to see if anybody wants to look at a particular symbol, you can pop that in there as well. So right now, right, we've got Sunoco and CALX and Masco are setting up as 1, 2, 3s. TEL, that one is popping off of a, so that would be off my list. It doesn't really match the criteria
Microsoft for the
for
first band.
what's a good setup. Julie had Microsoft through the first band on the trading plan, so boom, you can book a profit already, right? You've got those things sort of set up ahead of time, ready to rock and roll. And you're just looking again. We're looking for Tesla to get back up into the range here and give us an entry. We're looking at our Bookmap data. So normally I would have this, as I said, on a different screen. And you can see here what's happening with Tesla. So Tesla, the volatility here around the opening bell stems from all of this order flow that just gets stacked up. So you've got really blocks, right? Full block trades set up above. We've got 2 different blocks that you can just eyeball right there. I've got a laggy mouse here, and then a bunch of blocks up above it. So you get heavy discretionary or heavy passive orders up here to sell, and then underneath you get a little bit less order flow. So you've got really the gravity here is not working in your favor if what you're looking for is a short sale. So let's see if my guess is Tesla's going to get up here and it's going to clear 390, and then it's probably going to make a move up at 391. But when you're looking at your Bookmap data, what you want to see is sort of these bigger spheres. So you want to see not these little orbs, these little green and red orbs. You want to see when price gets to something. When price gets, for instance, up here to 390, if we see a big green market order that pushes through there, then we're going to start having some confidence that we're going to get up into 391. But it's got to get up above that 389.95 level first.
Microsoft went through the second band and is sort of here at this pivot.
So Microsoft, right? So Julie's trading that over there, and Microsoft is
no pivot there. So it's just up into the second band.
Right. These are so here it's going. You can see it came up through. So if you reference that trading plan that we had up, which I don't really have up anymore as a slide, but you can see it got down underneath our anticipated threshold levels. Got a really laggy mouse on this live stream, and then you see what happens here, right? So it came down, it got down underneath the level that we were looking for. What was the bottom band?
424.47.
Okay, so right about in here.
That's target.
So it opened, and now you've had a run from 424.47 all the way to the ultimate target. It ran the bands, right? This is what we're looking for: $2.50 per share traded, and you had it all set up ahead of time. You had those bands set up. You could, when I'm in my home computer or when I'm setting these things up to trade, you've got all these things as limit orders ahead of time. You've got bracket orders set up. You know what's going to happen. You just have to release it. Did it come from the proper direction? Did price make its move from where we thought it should, right? Proper direction, like I was saying before. It came down. It traded down from above. This didn't look like it had all that much promise. Then it gets down here, trades below the entry price, dips a little bit lower, comes back up, hits the entry, and boom, all the way to the profit objective. And like I said, Tesla, you're just still waiting. You're looking at this, and if you're looking for an opening trade and TSLA or TSLL, it didn't give it to you yet, but that's okay. It's not about, I have to get every one of these symbols, or oh my God, if I don't get a Tesla trade off, then I've got nothing going for the day. That's very dangerous thinking, right? If what you're used to doing is I'm going to trade Apple every day or I'm going to trade Tesla every day, well, it's good to have them set up as an opportunity every day. But what'll happen is if you think Apple's your go-to, and that's the only thing that you're focused on, you're not running these other trading plan setups and you don't have, you don't have sort of things, then you'll be glued to Apple. You won't pay any attention to anything else. And if it doesn't set up properly, if it doesn't have that exact dynamic going on in the pre-market that we said we want to see a thrust higher, we want to see it pause, we want to see it pivot, come back down to a threshold level, and then hit that threshold level, and then see institutional trading come in and a push higher. If you don't see this stuff happening, right, then you start telling yourself, well, maybe this is sort of a setup. Maybe this is a place that I can try to pull a few pennies out of this thing. And then at the end of the day, you're looking at what happened. And if you made money, I'm going to say that's even a worst case scenario, because now you're rewarded for doing something that you probably won't be able to replicate. If you lost money, you wind up on top of yourself saying, oh my God, right? I can't believe I didn't follow my trading plan. I can't believe I'm not doing, what I said I was going to do. Here's, in this case, like here's CALX. So now we're starting to watch this. Now you start stalking this. Now you're moving this down 43.96. If it goes 43.96, then if we look at this as a potential long setup, I don't know why this thing is acting like this. Hold on. Then, we might see a trade that gets up into 44.54. So in this case, we're looking at, where are the bodies buried, right? Where is the pre-market or the opening volatility? And what's the opening volatility telling us about what's going to go on? So that opening tick was where price reversed lower. If this triggers an entry, then, in my mind, what I'm looking to see is, do I have the opportunity for enough of a profit between the high of that bar and this level right here that it dropped off from? So I'm probably going to say, I'd like to see this dip a little bit lower here. So far, the only thing that's happened is Microsoft, right? So
Tesla.
The Tesla's now
You got it.
popping, right? So this is
So what do you want to share on Tesla?
moving here into move through our bands. So this was 281 a share on the plan trades. On the discretionary thing, we don't have anything yet, right? So on just an opening trade through these bands, I actually wrote about a 40-page book on trading the open that's available at Trader Insight. And if you guys do the moneyshow.com traderinsight.com/money show thing, I think what I'll do is give you that book. It's an ebook, about 40 pages long. We sell it for like $20. It's not a giant endeavor, but in those 40 pages, we cover these strategies and cover the opening trades in Tesla, the opening trades in Apple, right? How do you structure it? It can be anything. It could be any trade that's very, very liquid in the pre-market. How do you handle that if price gets into those ranges that you're looking for? And then it also covers the 2 SD gaps. It covers just about everything we do in the first hour. So I think that'll be a good resource for you if you come into the room to watch what we're doing, or if you're looking at the trading plans, right? I prefer everybody, if you're confused, don't stay confused. There's always my thinking on these things. Better to prepare people. So Sunoco, same thing. Sunoco's doing this stair step. See, this is what I'm talking about when I say 1, 2, 3. This would be 1 and 2 and 3 as you're getting the stair step lower. This big bar here. So this right now would sort of disqualify an entry from this level right here. So this one I would not take on a breach of 50.74. What I want to see happen first is either there's going to be a smaller bar right next to it that bottles up and builds up some tension at 50.74, or we're going to see a smaller bar that's a little bit lower and has a high, somewhere right around this volume by price. On Tesla, you can see, okay, so on the violation of the upper band, 389.94, boom, if you had a 1-by-1 bracket sitting there, That's easy pickings. You pick that up. Moving back down into the trading range here, same thing, right? 389.94. If you're looking for the potential for an entry here, then you've got the possibility that if it pops through that 389.94 level, that it's going to draw down into this 389 threshold here. So you start watching again, right? Is it making on the book map, you want to see, are there like small ticks happening that are constraining price? Are they constraining it from the bottom? That means there's algorithms, right? If there's a bunch of little share size down here, small share, small share, small share, and that stuff is propping price up, then that means they're trying to drive price into this order flow. They're getting compensated for trading order flow. If they let it go, right here, my guess is going to pop down into 389. So far, Tesla's done every single thing that we thought it was going to do, that we've talked about so far. It's gone and done. So it went up and it clipped 389. It went up, it got through 390, and it went up and it started chewing at this 391 level. All those things that we talked about earlier happened. That's what I mean when I say you can plan everything and you can anticipate things. Bernard Baruch said, 150 years ago or whatever it was, successful speculation is the art of anticipating the anticipators. And that's still as true today as it was then. So you're just going to, focus your energy, focus your attention on where are the arbiters of price, where are the things that are going to act like magnets. And you're not going to focus on, oh, geez, it's running to the upside. What I think I'm going to do is go hop on a trade because I don't want to miss the momentum. Momentum is not what you're looking for. Logical entries and exits. That's what you want to figure out here.
So you could look at Penn and tell them why you do or don't like it. It's a $1 stock with about a 30-cent spread.
All right. So Julie's looking at Penn. And, why do we like it? Why don't we like it? $300 stock, 30-cent spread. So spreads are tight. If we're looking at an entry on this, right, those last two bars, this 1, 2, 3 tick that it did, a little bit sloppy. So, you would probably look back at this 331.90 level as a potential threshold for an entry. On Sunoco, you see how it's doing what we were talking about, that the bar is starting to tighten up. So we're starting to see some compression down in the bottom of this trading range. If this thing leaves this little bar down here and, winds up being the case that on a short bar like this, we see a reversal through 49.30, we've got the potential for a move up maybe into this 50.74 threshold. This was a place that something happened. So this is a place that as price was moving lower, we got real order flow that pushed it down. If you look at the volume in that 5-minute bar, if you look at this volume by price level out here, right, even if none of these trigger, the most important thing that, that I want you to get from this is, did it do, sort of what it was that we were focusing on it doing. We've got Tesla right now. It's moving into the range here. So Tesla's coming down, orderly trade coming into what would be our 1-by-1 bracket. So I've got a 1-by-1 bracket on Tesla coming in from above. And there we go, right? So I'm out on Tesla. So Tesla, this one was a 389.94 entry. And then, you're just coming down and as you're ticking into here, this volume by price threshold really, down into 388.94, or in this case I had it closer to 389. Sorry about that. That's the Yorkshire Terrier who wants to be on the show too. That's Oliver. Very misbehaved little animal. But that got us out, right? So you've got a trade there. Let me see if I can figure out. So let's just take a look at that. Let's pick this apart since some of these aren't really popping yet. I could show you, not show orders. Let's look at the executions on Tesla so far. So we had one as it was coming up through the bands, and one as, oh, this is making me crazy, you guys. And one as it was moving down through. So if I can just get over to this darn thing. Say show executions. You said let's make them bigger. Okay, so as Julie said, there were opportunities. You can see these spheres here on the chart. Those are the places that we had execution. So going up 387.99 up through those bands from below. What's the logic there? The logic is if we're getting back into the trading range from the pre-market 387.99, that triggered us in. 389.08 got us out. That first one was a very, very structured trading opportunity for a move from the bottom band to the top band. The next one that we just took and traded was from 389.94 down to 389.08. So there's another one, right? Why 08? Why not all the way to 94? You had this support and resistance sitting here from before, and I'm going to tell you point blank, right? The best predictor of where are you going to be able to get the easy trade-off, the easy trade out into the market is where something just happened before. I don't want to be, trying to manage this trade. What I want to have happen is just, here is the structure. Here's where the order flow was. Here's where I anticipate then that the order flow is going to be. And you know what, the rest of it, I need to be able to focus on these guys. I need to look at Sunoco, right? Sunoco's popping up. It's doing you want to take care of Sunoco over there because I don't have it set. I don't have the level 2 set up. Okay. So Sunoco is set up for possibly a 49.30 entry. And then, if it moves higher, it's having trouble moving lower. It's not able to, continue this downward momentum. Now our question is, are the sellers stepping out of the way? So are the sellers now saying, well, wait a minute, I was a seller at 50.74, down here at $49, maybe we back off the market a little bit, let the market come back in. Think about how would a market maker think about what it is that he's doing? How does a market maker interact with this price? So, right here, you got about 10 minutes of trading time left, because what we do is at 7 a.m. Pacific time, we cut these off. At 7 a.m. Pacific, the gaps are 2 standard deviation moves in terms of volatility. 2 standard deviations is measured as part of a distribution. And as the day progresses, what happens is a distribution shifts. So now your normal distribution starts moving to the right or the left, and you no longer have this high probability of a mean reversion. So about 10 minutes from now, we're cutting these off, even if none of them trigger. So far, it's been the plan trades. The plan trades have been killer. Microsoft, Tesla has been, those guys have been on the money. The discretionary move on Tesla didn't happen, but, these runs back up into the trading range on that one, and through the bands on Microsoft happened. And look at Tesla. So what happened? If you went and you tried to push that thing, if you were trying to push that trade and get more out of it than what it was worth. Let me see if I can pull up a pen here and just sort of look at this on the chart. If you were like, well, I'm going to do this discretionary stuff, and I'm at 399.08, and boy, I'd love it if it got down into 387.99. I would love to make an additional $2 on there, $1.10 on this. I say this all the time, right? The market does not care in the least how much you would like to make or what you're willing to lose. What it's looking at is, this was a threshold level in the morning, and this was a threshold level in the morning. And that was a good place to anticipate an exit from this and from this level. So on a long entry, this inflection, yeah, you got out and then it shot higher, but look what happened in the interim. It came all the way back down, almost to where you got in. So now you'd be sitting there, you'd be sweating every tick. Am I right? Am I wrong? What's it going to do? And the second go around, if you didn't get out right at that inflection, you can absolutely go and anticipate where this price is going to be. If you didn't get out there, now you're looking at this. And if you didn't have the trade structured, holy smokes, right now it's like, oh my God, it's 389.94. You'd be looking at a $3 adverse move right now. And is that really something that you want to do? Or you just want to say, look, if I get in 387.99 and I get out 389.08, that's a good trade. If I get short 389.94 and I get out 399.08, you can see the executions there. They were perfect. And where did they happen? They happened right at the spot the price turned around. And when you go and you're on top of this, right, and you're looking at the thing like, the Bookmap, let's see how we did in terms of anticipating where price is going to go. Oh, look at that. We went exactly where we thought it was going to wind up. So when price was down. They're dynamiting the mountain if you hear these explosions in the background because they're trying to mitigate avalanches. If you look at this 380, 88.50 level, right, it was coming down. Retail traders are looking at that and saying the momentum is lower, and I'm going to try to, trade it back down into here somewhere. And what we were looking for was, are there small orders sitting there that are sort of pausing the market? And then do we start getting a thrust back up through that takes out 391, takes out 392? It's going to go 393 here at some point, right? I'm fairly well certain of that it's going to catch an inflection. It's going to come down. It's going to find some support. They're going to get some buying pressure on it again. And at some point, you're going to see it run into 393. That's what these opening trades are about, right? Is just get yourself in front of the opportunity for a profit and then understand the dynamics behind the market, understand why price is being drawn by a magnet. What's that magnet? It's order flow. It's what the institutions are doing. We're the little guys. We're not looking for our activity to influence the market in big stocks. If you're a penny stock guy, if you're a pink sheet guy or something, then that's a game of musical chairs as far as I'm concerned. It's not something I'm particularly interested in doing, but those stocks are moved by the actions of individuals, by the actions of chat rooms and things, right? So there's all sorts of dynamics that push those. This stuff, these are institutions. Institutions are the elephants. They can't hide their footprints. You can figure out what they're doing. That's everything that we're doing. When we do our income trading boot camp, that's 20 guys. Twice a year we do it in Miami Beach. There's 20 people sitting around that table, and what they're learning to do is anticipate what the institutional order flow is going to mean. So as we're looking over their shoulders for the 4 days in Miami, they've already spent a month or 2 months going through the online portion of the learning, and then we're down in Miami Beach for a week, and we're looking over their shoulders. And what we're making sure of is their psychology doesn't get the better of them at the net. Oh my God, look at it, it's going up. So many people will say things to me like, it's moving up so fast, I have to short it here because it just can't go any higher, right? It's so overbought. And my response is just, it can stay overbought for a long time, and your threshold for pain might not accommodate what it's about to do. So like Tesla here, right, as it's rolling over, what I'm looking for is, where does it find support and give me the opportunity for an entry that reverses back into where the liquidity is? It's going to hunt for the better liquidity. It's going to go look for the better liquidity. And if we can find a spot on the chart that represents where this thing is lining up with, all right, there's going to be enough buyers to pause the reversal, then what we're going to see is a move back up into that trading range. So here, again, now we're coming up on 4 minutes from these gaps sort of fading out on us and not having triggered, which is all right? We don't care. CALX, this one's coming up on possible entry right at that level, about 42.58 would be a spot that we could see a move on this yet. But with just a couple minutes remaining, and it looks like order flow on this one is not super high. I mean, it's done 910,000 shares, 912,000 shares so far. It's trading on tight spreads, but is it going to make that threshold in the next X minutes? 1 minute, as a matter of fact. This is probably one that I'm just going to pass on at that point. And that's okay, right? Because that's my plan. My plan is set these things up, have a logic, have a rationale for every single thing that we do. Make sure that, if you're going to do something and you want to talk to me about it afterwards, then you better know why you did it, right? Because that's where, the psychologist in me comes out and says, well, what are you thinking? Did you have a trading plan, or were you shooting from the hip? Because this is not a business that's easy to control if what you're doing all day is chasing. And, as long as you've got a plan in place and, that plan says, here's my entry, here's my stop, here's my target, I think you're good to go.
If you did CALX, probably that volume by price is your target.
Yeah, this volume by price threshold right here, Julie just talking there. By the way, in if you join us in Dallas, you get the whole package. You get Julie and me, and we're going to talk about we're not just going to talk about the trades. We're going to do a dive into the psychology. As a matter of fact, what I would love for everybody to do is on the traderinsight.com, you can do /MTRI, Man's Trader Readiness Inventory. Yeah, I'll send it to you. I'll send it to you guys if you do the traderinsight.com /money show thing. It's 100 questions. It's a fully validated index. We're researchers, right? So we put together an index that goes and figures out where your trading hangups might be. You'll learn something about yourself, and there's no charge to take it, and there's no charge for us to review it with you if you were here today either. So we'll go through those with you. Is there a best time to place your buy order? So Corey, the way that you want to handle things, or that I handle things, you can do whatever you like. Is, yes, I'm using limit orders. I'm using stop limit orders. So if price is coming up from below on something like CALX, when your threshold level was 43.80, then I would place a bracket order. So this is not the order form that I would use here. I would use a bracket order that just pops up and says, let's see here if I can show you this really quick. Yeah. Didn't even pop up.
That's the excitement of live.
Okay, jeez. That's what can go wrong, will go wrong. It's well, a bracket order with a stop limit is how you would want to set this. So okay, here we go. I got the pop-up. So what I do is I set these orders ahead of time. So in this case, like this 43.80 would have been the level before, now 42.58. On the two SD trades, you're just constantly readjusting your bracket. And once the bracket goes live on the screen, so let's say in this case, this would be a stop limit order, right? Because you're coming up to the price from below. If you did a limit order, it's just going to sweep you. That's a sweep order. If you're doing a stop limit order in this case, and let's say it was 43.80. So on a 43, I typed it on the wrong machine. Hold on. If you're doing a 43.80 stop limit, all right, you would have 43.80 as the stop. That's the activation price. That's where your order would go live. And then, it's trading on tight spreads. Let's say it was 43.85. And then you've got your quantity, right? So you would do, when you set this order up initially, you would do a day order. And then I would say, get me out of 100% of the trade for a profit objective, 100% of the trade for a stop loss. And in this case, the offset was, like I said, initially, we were only looking at a 35-cent profit. And initially, we were looking at about a 30-cent loss was how this was set up. So that's just how the trade would be structured. And then you would just roll this trade out. You would, as soon as you hit place the order, then this would go live. And in the case of CALX, what would happen is as price is moving down through these levels, and it makes these higher, right? So as these highs start moving lower, you'd be moving your buy order down. So right now, this one triggered from earlier. And if I wanted to get out of this position, right, you can do this a number of ways too. You could just say, okay, so I've got no, this one triggered, 42.58. So you're in here. If you wanted to get out of this immediately, right, you can just go and you could do a market order to get out, or you can do a limit order. So you could just come in and say, all right, I want to get out. And in this case, I'm going to do a limit, right? And say my limit is 42.50. And that's where I was going to sell it. And then I say, you know what? I don't think this is, I'm just going to scratch this trade, right? Then I can just pull down through there, and that's going to close me out of the position. So closed out of the position for 0 because it didn't do what I thought it was going to do, but I swept back out of the position again, right? So I mean, 0 is I can't bring this over, but 0 is subjective. It's based on not where did you get filled, where were you supposed to get filled. So you put your break-even stop goes, in this case there was a 9-cent difference between what would have been 0 and where we wound up exiting the trade. No biggie. It's, on this trade, I call it a scratch. It's $9 total, right? That was eliminated based on the stop when it didn't do what we thought that it was going to do. All right, so you can check out on the site. You can go every day at the top of traderinsight.com. This thing says trading recap, and that trading recap, what that gives you then is the summary of what happened for the day. There's a video that I do every day of some featured trade where somebody in the room is asking questions, and that video gets posted to that, and it's a nice way to just sort of keep your head in the game. There's a full list of all the trades on a typical day in the trading room. We get in front of $10 to $20 worth of opportunity. So $10 to $20 per share traded worth of opportunity is there every single day for the pickings. If you do come in, I encourage you ask lots of questions. It makes trading gets pretty boring sometimes during the day. And if you're in there and you want to know things like what's the time to place your order, where do you using stops, limits, what is it? And I'm happy to go through that. But that's it. So anybody have any other questions? I think I'm right at my shutdown window here.
Yes, we are
Yeah.
right at time. But Adrian, thank you so much. And Julie, I know you're there in the background as well. Thank you as well for a great session from both of you. It's been fantastic.
All righty. Thank you so much.
Yes, what a great way to start off the second day of this virtual expo. And to those of you watching us live, thank you as well for joining us. And be sure to stay tuned as we have a lot more in store for you today in this Money Show Virtual Expo. I hope everyone has a wonderful rest of your day. Take care.
Thank you.